Today in crypto. Bitcoin, BTC, nosedived by more than 9% in the last 24 hours to trade at $32,875 during the intraday, according to CoinMarketCap. The top cryptocurrency has been trying to regain momentum since it slumped to lows of $30,000 on May 19. This plunge pushed Bitcoin below the 200-day moving average, MA. A fate not seen since March 2020. On-chain analyst William Clemente III noted that Bitcoin demand by U.S. institutional investors had slowed down. He explained, "It seems that U.S. institutional demand for BTC has slowed." Coins had been moving off Coinbase at a growing rate until late February. Now the trend has reversed. He further pointed out that whale holdings of more than 1,000 BTC had been dropping since February. According to a recent weekly report by digital asset firm CoinShares, institutional investors continued to reduce their long positions in BTC. The net outflow reached a record of $141.4 million in the past week. Is Bitcoin's bull run over? According to an analysis by investment manager Timothy Peterson, Bitcoin's bull run might be over because the leading cryptocurrency has traded below the 200-day MA for 17 consecutive days. He stated, "Bitcoin price has dropped below 200 SMA for 17 consecutive days and counting." This metric has always marked the end of a bull run and the start of a bear market. The 200-day MA is a key technical indicator used to determine the general market trend. It is a line that shows the average closing price for the last 200 days or roughly 40 weeks of trading. It, however, remains to be seen whether a shift is playing out in the Bitcoin market. Meanwhile, former U.S. President Donald Trump showed his dislike for Bitcoin because he views it as another currency competing against the dollar. Trump has always depicted his disapproval of cryptocurrencies due to its high volatility. Bitcoin has been trying to breach the psychological price of $40,000 after the top cryptocurrency nosedived to lows of $30,000 on May 19 from an all-time high of $64.8K recorded in mid-April. Market analyst Michael van de Poppe believes that a breakout might happen in the week because the volume is draining down. He explained, "Bitcoin is ready for the climax. Lower highs, higher lows, volume draining down. All levels are tested. Even $34,800 is now tested. The breakout of this construction should be happening in the next 7 days or so." BTC suffered the sharp correction on May 19 as the price fell to around $30,000, resulting in the biggest single-day drop of price, up to 30%. Furthermore, this price drop became the first time BTC had dropped below the 200-day moving average, MA. The 200-day MA is a key technical indicator used to determine the general market trend. It is a line that shows the average closing price for the last 200 days or roughly 40 weeks of trading. Bitcoin miners sold more than 5,000 BTC in the past week according to on-chain analyst William Clemente III. Bitcoin miners liquidated their holdings by selling more than 5,000 BTC last week. On the other hand, the number of active Bitcoin addresses hit a 7-month low of 49,648.964, as acknowledged by on-chain metrics provider Glassnode. Notable BTC adoption, however, was experienced in Southeast Asia, according to Joseph Young. The crypto analyst explained, "There is massive Bitcoin and overall crypto adoption happening in Southeast Asia. Particularly, the Philippines, Thailand, and Vietnam are showing a rapid increase in user activity." Price talk aside, this fundamental growth is very inspiring and optimistic. Meanwhile, El Salvador seeks to be the first nation to legalize Bitcoin as legal tender. If this materializes, BTC is expected to boost the nation's economy by offering financial inclusion and generating jobs. China's Office of the Central Cyberspace Affairs Commission and the Ministry of Industry and Information Technology, MIIT, have identified 4 essential application areas for blockchain adoption. The MIIT's 5-point agenda for blockchain adoption is part of a document issued on Monday detailing guiding opinions to accelerate the promotion of the emerging technology for industrial development. Continue reading on Coin Telegraph. The U.S. reclaims $2.3 million from a ransomware attack made 3 weeks ago. DarkSide cybercrime group is responsible for the attack. The U.S. government will give cybercrime a headstrong battle. U.S. task force reclaims $2.3 million from a ransomware attack that took place 3 weeks ago. So far, the U.S. officials have not disclosed any details about the method of recovery. Initially, the attack took $90 million from the Colonial Pipeline. Additionally, the attacks prompted the company to shut down its operations at the East Coast Pipeline. The FBI said DarkSide Cybercrime Group is responsible for the attack. Moreover, DarkSide, the East European-based company, supposedly shut down a week before the attacks. Its business mostly includes conducting cyber attacks and developing RAN. This article was first published on coinquara.com. Continue reading on Coinquara. In lieu of expanding the main ledger's functionality, Ripple's developers argue that using federated sidechains will help preserve the blockchain's leanness and efficiency for payments. Ripple's developers have been engaging with feedback and suggestions that they expand the XRP ledger, or XRPL, to integrate functionalities such as smart contracts. The latter have become a major feature of the booming decentralized finance space, but Ripple's creators claim that a different solution is better for the payments-focused XRPL. This solution comes in the form of what they term federated sidechains, i.e., parallel ledgers that can support developers' experimentation and specialized interests, whether for DeFi or other use cases. Using sidechains can leave the main XRPL streamlined and efficient while expanding the functionality of the wider XRP ecosystem by offering interoperability for native smart contracts and other features. To facilitate this interoperability, Ripple's creators are proposing a piece of federator software, connected on one end to the XRPL mainnet, and on the other, to one or more sidechains. Each of these function as their own blockchain, but they use XRP as their main asset. Moreover, the federation system supports the transfer of XRP and issues tokens between them and the main ledger. Validators who operate at least one sidechain will be eligible to run the federator software. To integrate this new software, Ripple says it only needs to make 2 trivial changes to the operation of the XRPL network. New features on the XRPL server software will allow it to operate in a sidechain, but these features will not be enabled on the mainnet itself. Further outlining the federated system, Ripple Chief Technology Officer David Schwartz writes, each sidechain can choose to either use the XRP as its native assets or have its own new native asset. In the former case, the sidechain's account on the mainnet will contain its total XRP holdings in trust for use on the sidechain. In the latter, the sidechain's mainnet account can be used to issue the new, native asset on the XRPL mainnet. Schwartz said that the advantages of the federated system are its low-risk approach, capacity for horizontal scaling, simple support for new blockchain experimentations, and a long-term vision that can accommodate an evolving toolset and ongoing feedback on new sidechain developments. As previously reported, sidechains have become a popular approach for blockchain developers to try out new solutions to resolving scaling issues and integrate new functionalities into established blockchain ecosystems like Ethereum. Hit the like button and subscribe to the channel.